There's $30 trillion with a T, 30 trillion controlled by advisors. And when I say controlled, I literally mean controlled, meaning the person who gave it to the advisor doesn't make the decisions anymore. Those advisors make the decisions, and they happen to be primarily, not that there aren't some good young advisors, but primarily they're of a certain age and experience level, and ETFs are their go-to tool. Now there's the sinister side, which says this is a Trojan horse, and this is, hey, let's suck all the Bitcoin into these boomer wrappers. And then, Max Kaiser's out saying, and then we're going to seize it all. If you read the fine print, it technically is possible. That is one of the risks that people have to talk about.
Mark Yusko, the founder of Morgan Creek Capital, joins us in today's video to give us a thorough report on the current status of the cryptocurrency industry. Yusko predicts that in the upcoming weeks, prices would rise at an unprecedented and impending parabolic rate. Yusko is excited about the upcoming bull run, highlighting how unique it will be from anything we've seen recently. He credits the expected upswing to the SEC's acceptance of BlackRock Bitcoin ETF proposal, which marked a significant inflow of funds into the cryptocurrency market. As of now, Bitcoin is hovering just above $46,600, experiencing a 7% dip in the last 24 hours. Yusko draws attention to the sharp and unexpected price gains that have been seen in a number of cryptocurrencies over the last several weeks. Especially, he emphasizes how a small 1% investment from BlackRock's portfolio might open the door to hundreds of billions of dollars in institutional finance. Yusko boldly predicts a remarkable 400% increase in the price of Bitcoin alone, setting a target of $150,000. He compares this prediction to the halving of Bitcoin, implying that the timing may bring about the biggest cryptocurrency boom in a few months. Stay tuned as we delve into the latest interview with Mark Yusko, where he shares his in-depth cryptocurrency price predictions and outlines the timeline for Bitcoin, providing insights into what we can expect in the days and weeks ahead. Let's get started and hear what he will say.
It is their number one tool. It's not mutual funds, it's not stocks and bonds, it's not treasuries, it's not cash, it is ETFs. And so to be able to own the greatest diversifying asset in the history of assets, just let that sink in for a second. There are a lot of diversifying assets. Commodities, hedge funds, private equity, venture capital, a lot of diversifying assets. When you add them to the portfolio, your Sharpe ratio goes up, your risk goes down, your return goes up. Bitcoin is the greatest diversifying asset ever. Over 15 years, it's got 0.0 correlation to bonds, 0.15 correlation to stocks. You add it to your portfolio gets better. If you would have gone back a year ago, you would have said zero chance of a Bitcoin ETF. After 9 years of trying and everybody, and I actually started tweeting maybe 9 months ago that it was going to change because BlackRock was going to get approved. And everybody's like, they haven't even entered the fray. They haven't even, just trust me.
Said it here.
BlackRock is going to be first. And I actually said, and I said this right up until Friday, that they were going to be the only one. I actually believed that the SEC would kingmake, right? I believed that they would defer, and Hunter and I talked about this, that look, we own little pieces of Bitwise, and we own little pieces of Amun, which is part of 21 shares. So I really wanted them to get approved, but I didn't think they were going to. I thought that they were going to play favorites and give all of it to Uncle Larry. And I'm glad I was wrong, because it's way better to have an open free market. And 11 on 11 is kind of cool. But I think what changed is a couple things. A bunch of 2x4s to the head by the courts. So that certainly changed.
A lot of credit to Grayscale. A lot of credit.
Yeah, a lot of credit to Grayscale, and look, there's been a bunch of other things that have changed. Now there's the sinister side, which says this is a Trojan horse, and this is, hey, let's suck all the Bitcoin into these boomer wrappers, and then Max Kaiser's out saying, and then we're going to seize it all. Look, if you read the fine print, it technically is possible. That is one of the risks that people have to talk about. I don't think it's a real risk. I don't think it's likely, but look, that's another narrative that's out there. So on the ETH, I don't think it's coming because there's no catalyst for GG to give in on that one.
Mark Yusko speaks on the importance of exchange-traded funds, ETFs, as a key instrument in the financial system. He emphasizes how ETFs have surpassed more conventional investment alternatives, including mutual funds, stocks, bonds, treasuries, and cash, to become the primary means for investing. He highlights the importance of holding Bitcoin, which he views as the most diversified asset in history. According to Yusko, diversifying investments can help a portfolio's risk-return profile. Examples of these assets include commodities, hedge funds, private equity, and venture capital. But he contends that with a 0.0 correlation to bonds and a 0.15 correlation to equities over a 15-year period, Bitcoin stands out as the perfect diversified asset. Yusko says he's surprised that the SEC approved a Bitcoin ETF, noting that 9 years in, many people thought there was no way this would happen. Even if others had doubts, he anticipated BlackRock's acceptance and thought they would be the first to gain SEC permission. Yusko attributes the shifting terrain to a number of things, such as the determination of businesses like Grayscale and legal advancements. Although he acknowledges the possible worries that ETFs may be a Trojan horse or a way to manipulate Bitcoin, he does not see a compelling reason for regulatory organizations to get involved in this way. In general, Yusko's remarks highlight how Bitcoin may be a transformational asset when it comes to diversification, and he anticipates that it will be included into traditional financial instruments like exchange-traded funds, ETFs. This indicates that the general public's view of cryptocurrencies is evolving, but Yusko didn't stop there. Let's hear what he has to say once more.
Most people don't really understand the difference between big B Bitcoin and little b Bitcoin, right? The token, as much as I don't really care for his tone and his manner, he's right. The token, right, is a speculative asset. It is. It is an asset that can be bought and sold and doesn't generate income and all these things that they say. But what's missing from that is big B Bitcoin is the greatest computer network in the history of mankind. And it is the new base layer of money, right? It is. Triple entry accounting is an innovation, fire, electricity. I mean, there aren't that many others, really. I mean, triple entry accounting is an amazing movement. And what I think is just hard for people to understand until you have that aha moment. And, all of us and everybody listening is fortunate, right? We're lucky because we had that aha moment. We had that epiphany where you can see it. And once you see it, you don't unsee it. Once you understand that single entry accounting, which persisted for thousands of years, was a pretty tough system because it was entirely corruptible, right? If I keep a ledger and I lend you guys money, I can change the books because I might not be a trustworthy person. So the Medicis 838 years ago came along and said, you know what? 2 entries is better than 1. 2 ledgers better than 1. And we, the benevolent, not so, Medicis, for a small fee, will provide trust. We will make sure that, no one changes their books. But the problem is, it turned out they were corruptible, right? I lend money to Hunter. He comes back a year later to pay me back. I've gone to the Medicis and said, guys, I'm gonna change my number from 100 to 2, and I'll give you half. And they're like, done. So Hunter comes back with the 110. He's like, here you go. I'm like, oh, Hunter, 200. Say, hey, Medicis. They're like, Hunter, you must have written the number down wrong. We're so sorry. So triple entry now says, nope, Mark wrote the number, Hunter wrote the number, and a permanent, immutable truth. Truth is better than trust. It just is. And so as we migrate, all of it, right? All assets in the world, all $700 trillion of assets eventually migrate to truth from trust. That's a really big deal. There are big firms, and I won't name names, one where I have a family harmony account because my brother-in-law is an advisor. I've tried for years to buy everything, including Hunter's product, and they're like, nope. It says crypto. No, absolutely not. There's another firm, again, won't name names. If you made your money in crypto, they won't take you as a client. That all changes today. All of that.
JP Morgan.
That all goes away. And this really isn't about the movement. You'll take me, thank you. This isn't about the shift of deck chairs on the Titanic, like all the naysayers want to say. There's 30 billion on the low end. That's 10 basis points over the next few months. I actually think it's 10 times that. I think it's 300 billion. That's one. That's a 1%, because what's going to happen at these firms, the model, right, the house model is going to say 1%. You got to have 1%. So now if you're an advisor, you don't have a choice.
In the video's conclusion says, Mark Yusko clarifies a common misunderstanding that most people have regarding the distinction between Big B and Little b Bitcoin. He admits that this distinction has value, even though he doesn't always agree with the way it's stated or the tone it takes. The token, sometimes known as the Little b Bitcoin, is viewed as a speculative asset that may be purchased and sold, but doesn't provide any revenue. But Yusko draws attention to the important detail that is frequently overlooked. Big B. Bitcoin is the next foundational unit of currency and symbolizes the largest computer network in human history. He highlights that triple entry accounting, which Bitcoin uses, is a revolutionary development and draws comparisons to other revolutionary inventions like electricity and fire. Yusko also explores the development of accounting systems and explains the drawbacks of double and single entry accounting, including their vulnerability to corruption. He explains how Bitcoin's implementation of triple entry accounting provides an unchangeable fact that is more reliable than blind faith. An unmatched degree of security and transparency is made possible by the permanence and immutability of the data on the blockchain. Yusko encourages everyone to understand the significance of this transition from trust-based to truth-based systems, stating that when all global assets, which total around $700 trillion, finally move from trust to truth, it represents a significant change. Lastly, Yusko talks about how financial businesses are changing and how people's perspectives about investing in cryptocurrencies are changing. Organizations who had opposed becoming involved with cryptocurrency are suddenly changing their minds. He projects that there will be a huge inflow of cash and that the financial sector will go through a dramatic transformation, with at least 1% of assets under management having to be devoted to cryptocurrencies. According to Yusko, this move is a fundamental one that will completely rethink how the industry views cryptocurrencies rather than just rearranging the deck chairs. If you found Mark Yusko's insights on Bitcoin and the transformative potential of blockchain technology intriguing, make sure to subscribe to our channel for more thought-provoking content from industry experts. Don't miss out on the latest updates and analyses that can shape your understanding of the rapidly evolving world of finance. Click that subscribe button, hit the notification bell, and give this video a thumbs up if you enjoyed the discussion. Your support helps us continue bringing you valuable insights. Thank you for watching, and we'll see you in the next video.